Welcome to Talk Tickers. We're your shortcut to understanding what really matters from the latest earnings calls.
Yep, we cut through the noise, pull out the key facts, the important insights.
And today we're diving deep into QuantumScape's second quarter 2025 earnings call. We're not just looking at the spreadsheet numbers, are we?
No, definitely not. We're looking at the strategy, the tech, how this might actually reshape the whole battery landscape for cars and maybe beyond, connecting those dots.
Okay, so let's just start with a quick flyover of the big announcements from the call. First, the financials, they've pushed out their cash runway quite significantly, actually, into 2029 and tightened up expense guidance.
That runway extension is key. We'll definitely unpack that.
Right. Then strategically, a big one, an expanded deal with PowerCo, that's Volkswagen Group's battery arm, and maybe just as important, a new joint development agreement, a JDA with another major global car maker.
That's interesting. Two big OEM partnerships moving forward.
Exactly. And underpinning a lot of this is a tech breakthrough they're calling the Cobra process. So quite a bit to cover. As you hear those headlines, what's the first thing that sort of jumps out at you? Okay, let's dig into those financials first. Q2 2025. The standout news, as we mentioned, is that cash runway forecast. It's now stretched into 2029.
Which is a solid 6-month improvement from what they guided before. That's pretty significant breathing room.
It really is. They finished the quarter with about $797.5 million in liquidity. Now, they are still operating at a loss, no surprise there for a company at this stage. Adjusted EBITDA loss was $63 million for the quarter.
Which they said was right in line with what they expected.
Yeah, and they actually narrowed the full year guidance for that loss slightly, maybe showing a bit more, control over spending.
Or predictability, at least.
Right. Capital expenditures, CapEx, that was $8.3 million in Q2. But they're signaling more investment coming up, narrowing the full year range to between $45 and $65 million. So expect higher spending in the second half.
And that 6-month runway extension, it's worth lingering on that for a second. It's not just like accounting magic. They directly linked it to the new PowerCo money coming in and also getting leaner operationally.
Okay, so tangible drivers.
Exactly. And they even hinted that, other customer money or maybe tapping the capital markets down the line could push that date out even further. It validates their financial management a bit, takes some pressure off, buys them time, which is crucial.
Which brings us neatly to that PowerCo deal. Volkswagen Group. Lots of buzz around this one. They're calling it an upgraded collaboration and licensing agreement.
Yeah, more than just an extension.
Right. So PowerCo is putting in up to an additional $131 million over the next 2 years. And this money is specifically earmarked to support getting things commercialized together.
And they're already hitting milestones for that, right?
Get this, yes. The first milestones, linked to payments over $10 million, already achieved. They expect to invoice PowerCo in Q3. And just to be clear, this $131 million is totally separate from the $130 million they announced previously, which is tied to technical progress and signing the full license.
Okay, so new money focused on commercialization. That's a strong signal from VW.
Definitely.
Yeah.
And under this deal, QuantumScape is going to prioritize its QSC5 cells, that's their Gen 5 design from the San Jose pilot line, for PowerCo.
But not exclusively.
Correct. They made that clear. It's not exclusive, so they can still sell to others. And PowerCo gets the right to produce an extra 5 gigawatt-hours of QS cells per year under license.
Which brings their total potential licensed capacity to...
a staggering 85 gigawatt-hours.
Wow. Okay, context.
They pointed out that's double what Tesla and Panasonic do at the Nevada Gigafactory. Double.
That's massive scale they're planning for.
And PowerCo also locked in future rights to license even more advanced QuantumScape tech beyond this first QSC5 generation. QuantumScape is framing this whole thing as, look, proof of our tech's value and proof our capital-light model works, get paid for development up front, then collect royalties later.
And zeroing out, that PowerCo expansion is just huge validation, isn't it? It shows a major OEM is putting serious money behind bringing this solid-state tech to market. It perfectly matches that business model they keep talking about.
The two income streams idea.
Exactly. Near-term cash from development, like this PowerCo money, and then the longer-term royalties as PowerCo ramps up production using their license. It's the strategy playing out, and crucially, it's a massive proof of concept for the QSC5 cell itself.
And it wasn't just Volkswagen. They also announced a new joint development agreement, a JDA, with another major global OEM. They didn't name names on this one.
Okay, so building on a previous sampling relationship, it sounds like?
That's right. Moving beyond just sending samples to actually working together towards, a full commercial and licensing deal, they explicitly said it follows the same playbook as PowerCo,
Which means?
adapting their core tech platform to what this specific customer needs, and then setting things up to transfer that tech so the customer can build it at scale.
Right. That sounds like their high-touch model. They seem very intentional about who they partner with and how deep those relationships go.
You think that's about IP protection?
Partly that, yeah, and also just resource management. This kind of deep collaboration takes a lot of effort. They can't do it with everyone simultaneously, so they're choosing partners carefully. It points to a very managed, deliberate scaling plan, not just signing up anyone who calls.
Okay, let's switch to the tech side, the Cobra process. It sounds like a really big deal. Announced back on June 24th, it's now replaced Raptor as their main way of making the separator.
And the separator is the heart of their solid-state tech, right?
Yeah, exactly. They're calling Cobra a transformative innovation in ceramics processing. Now, how transformative? Get this. Improves heat treatment efficiency by over 200 times.
200 times, wow.
And offers a 25x productivity improvement compared to Raptor. 25 times faster, basically.
Okay, that's a huge leap. What does that enable?
Well, they expect this jump to allow them to ship B1 samples later this year. Those are the more mature, closer to production samples.
Mm-hmm.
And they see Cobra as the critical tech piece needed to get to gigawatt-hour scale manufacturing. Plus, they said it still has headroom for even more improvement.
That 25x boost makes sense with their goals. If you make the separator that much faster, you absolutely need the rest of the assembly line to keep up, right?
Good point. Did they mention that?
Yeah, they did. They specifically said they're installing higher volume cell production equipment precisely because Cobra can pump out separators so much faster. It's all got a balance. It's a key part of hitting their 2025 production targets.
And what about actual cells going out the door? They said QSC5 cells were shipped to a launch customer in Q2.
Okay, for what purpose?
For pack integration and testing. Includes safety testing, which is obviously critical. But these were the last B0 samples made with the older Raptor process.
Ah, so the early prototypes for initial checks.
Exactly. The next shipments will be the B1 samples made using this new, faster Cobra process. Field testing in actual vehicles, though, that's still targeted for 2026.
And it's always worth remembering, scaling any battery tech is just incredibly hard. The breakthroughs like Cobra are fantastic, but the day-to-day grind is about improving things like cell reliability, making the process stable, keeping the machines running uptime.
The unglamorous stuff that makes or breaks commercialization.
Precisely. That's where their focus has to be now, alongside the big tech leaps.
So if we step back and look at the whole picture from this call, QuantumScape is definitely positioning this quarter as a major inflection point.
Shifting gears, basically.
Yeah, they feel they're now properly in the commercialization phase. They keep hammering that capital-light licensing model, its potential to shake up not just cars, but, other big markets too. We're talking a total addressable market, potentially hundreds of billions a year. They seem to feel the recent deals really validate that path.
And one thing they really leaned into on the call was the anode-free, graphite-free aspect of their tech.
Right. Why is that so significant?
Well, they flat out said it's the best way not to have graphite in your system. That hits on a couple of big points. First, supply chain. Over 90% of battery graphite comes from China. That's a huge dependency.
A vulnerability, really.
Definitely. Second, environmental concerns. They highlighted that traditional graphite production isn't exactly clean. So this anode-free approach potentially sidesteps both those issues. It gives customers worried about geopolitics or ESG factors real optionality.
And could that open up other doors? Beyond cars?
They think so. They mentioned potential interest from U.S. defense contractors or maybe drone makers, particularly given recent executive orders restricting certain supply chains. So it begs a question for you, the listener. If this tech really takes off, what does that do to the future of battery materials? How does it shift the global supply map? Oh, and just a quick clarification on the accounting for that PowerCo money, the $10 million plus expected in Q3.
Yeah. Will it count as revenue?
Their initial assessment is no, actually. It won't be recognized as revenue under GAAP rules, but they do expect it to flow through to the bottom line, improving results and reducing the GAAP net loss. Because it aligns with their long-term plans, it's seen as accretive, essentially offsetting costs. They promise more details on the Q3 call.
Okay, good to know. and any talk about raising more money equity markets.
They addressed that, basically reaffirmed they want to keep a strong balance sheet. They see that as a competitive advantage, and they'll be, quote, strategic about any potential capital markets moves. Standard stuff, really.
Right.
Keep options open, but emphasize current strength.
Okay, so let's quickly recap the big takeaways from this QuantumScape call. Number one, that significantly expanded PowerCo deal, more money, huge potential license capacity increase.
Major validation.
2, a new JDA with another big global OEM following the same playbook.
Expanding the pipeline.
3, the Cobra process is now baseline, a massive tech leap enabling those B1 samples this year.
Crucial for scaling.
And 4, all this contributes to extending that cash runway out into 2029. It really feels like they're shifting fully into commercialization mode now.
Yeah, feels like a tangible step change this quarter.
All right, now for something a bit different. Let's indulge in a purely hypothetical thought experiment. And just to be absolutely crystal clear, this is not financial advice. We are not recommending you buy or sell anything. Seriously.
Definitely not. This is just connecting some dots from the call, playing out a potential scenario, purely for discussion.
Okay, disclaimer delivered. So if we were looking for a potentially disruptive market idea based only on what was said in this earnings call.
Okay, here's one provocative long-term thesis you could potentially build based directly on their commentary. Think about going long QuantumScape shares while simultaneously going short a basket of traditional industrial graphite anode suppliers.
Interesting. Long QS, short graphite. What's the logic straight from the call?
The rationale comes from their repeated emphasis on being anode-free, graphite-free. Leadership literally said it's the best way not to have graphite in your system. They hammered the point about over 90% of graphite coming from China and the process being duddy. Now, if, and it's still an if, their capital-light licensing model scales successfully.
Especially with that huge VW PowerCo deal, the 85 GWH potential.
Exactly, that scale is key. And the new JDA adds another major player. If that model works and anode-free tech gets adopted rapidly, what happens to demand for traditional graphite?
It would crater, presumably.
Right. It would create massive headwinds for companies whose entire business relies on digging up and processing graphite for battery anodes. So this hypothetical trade is essentially a bet that QuantumScape's tech could make a key component of today's lithium-ion batteries obsolete, or at least significantly less relevant, much faster than the market expects. It's a bet on fundamental supply chain disruption.
That certainly gives you something to think about. So here's the final thought we want to leave you with. Considering QuantumScape's ambitions, these big partnerships they've announced, and this Cobra technology leap, how fast could this solid-state approach really transform things? Not just cars, but maybe global energy independence, defense tech. And what does that potential speed mean for every company involved in the old way of making batteries, all the way down the supply chain?
Lots to mull over there.
Indeed. We encourage you to explore those questions. And remember, again, our discussion today was purely for informational purposes. It is absolutely not financial advice. Thanks for diving deep with us here on Talk Techers.